He walked in like any ordinary customer, shirt tucked, posture relaxed, greeting calm. But the bag in his hand wasn't groceries. It was cash, stacks of it, crisp, bundled, and illegal. And TD Bank, one of the biggest, most trusted financial institutions in North America, let every dollar slide into the system without a single raised eyebrow. What no one realized then was that this wasn't a one-off moment. It wasn't one courier or one criminal crew. It was the opening act of one of the biggest anti-money laundering failures in modern U.S. banking history. So catastrophic that by October 2024, TD Bank was forced to plead guilty to criminal conspiracy and pay a record-breaking $3 billion penalty. Not a fine, a confession, a rare, humiliating admission that its own system helped wash more than $670 million in criminal proceeds, most of it linked to cartels, fentanyl traffickers, and international underground banking rings that operated in plain sight. The wildest twist, TD Bank didn't try to help criminals. Its biggest selling point, speed, ease, convenience, became the perfect weapon in the hands of people who knew how to exploit it. America's most convenient bank wasn't just a slogan, it was a decoder. Fast account openings, low paperwork, smiling tellers, frictionless deposits, heaven for customers, heaven for criminals. Between 2016 and 2022, at least 3 major transnational networks figured out that TD Bank's convenience wasn't merely a perk. It was a loophole wider than its own lobby doors. They walked into branches in Florida, New Jersey, and New York, carrying grocery bags and duffels stuffed with cash. They deposited $10,000 a day, just under the reporting threshold, to avoid triggering mandatory federal alerts. They opened accounts with identical Venezuelan passports, burner phone numbers, repeated email formats. The patterns were obvious to anyone paying attention. Some tellers did notice. Some flagged accounts internally. Some begged compliance departments to review the suspicious customers standing in front of them every other day with another bag of cash. But the alerts never led anywhere because the bank's anti-money laundering system was collapsing under its own growth. Tens of thousands of alerts stacked up, unread, frozen in queues. Employees were assigned hundreds of cases a day, workloads that no human could realistically process. One compliance analyst even joked internally that if they filed every suspicious activity report they were supposed to, the entire bank would shut down. That dark humor would eventually become evidence. By 2023, federal investigators finally connected the dots. They realized criminals weren't slipping through cracks. They were operating comfortably inside them. One cartel-linked network laundered over $100 million in drug proceeds, much of it tied to fentanyl flooding American streets. Another group linked to Chinese underground banking operations quietly moved illicit cash from U.S. drug sales into Asia, where it was converted into real estate investments, shell company deposits, and business acquisitions. And each step carried the legitimacy of TD Bank's official stamp. The deeper investigators dug, the uglier the picture became. Cash couriers posing as small business owners, fake remittance firms masking drug profits, shell companies funneling bribes across borders, branch managers waving through suspicious deposits and internal reports of employees accepting small gifts for faster service. By the time the U.S. Treasury, FinCEN, the Office of the Comptroller, and the Department of Justice formed a full joint investigation, the scale was staggering. TD Bank had failed to properly monitor more than $18 trillion in customer activity, almost the size of the entire U.S. economy. The conclusion was undeniable. This wasn't negligence at the edges. It was systemic breakdown at the core. And so, in October 2024, the hammer fell harder than almost any modern bank had ever experienced. Prosecutors demanded a guilty plea, not a quiet settlement, not a deferred agreement, not a behind-the-scenes handshake. A full plea to criminal conspiracy. A public statement that TD Bank's systems had helped move criminal money for years, that executives ignored repeated internal warnings, that compliance failures were not accidental, they were entrenched. TD Bank, headquartered in Toronto and known for green logos and polite service, became the first major Canadian bank in history to plead guilty to a U.S. federal crime. The penalties were massive: $1.4 billion to the Department of Justice, $1.3 billion to FinCEN, $450 million to the Office of the Comptroller, totaling $3 billion in one of the largest enforcement actions ever taken against a bank. But the financial hit wasn't the real punishment. Washington imposed something far worse: a growth freeze. TD Bank's U.S. arm, once its fastest-growing business, was put under strict government supervision. No expansions, no acquisitions, no mergers. Nothing until federal regulators are satisfied that the bank has rebuilt its anti-money laundering system from the ground up. Even worse, an independent monitor now operates inside TD Bank, watching every move, reviewing every suspicious activity alert, reporting directly to the U.S. government. Analysts call it regulatory house arrest, and for a bank once valued at over $100 billion, the humiliation is historic. How did a bank this big fall this far? Because the very features customers loved most turned into structural vulnerabilities. Digital deposits moved too quickly to scrutinize. Wire transfers zipped through systems with almost no friction. Low paperwork onboarding made it easy to create dozens of accounts under recycled identities. Behind the scenes, internal technology lagged far behind the bank's growth. Systems crashed. Alerts froze. Compliance teams begged for resources they didn't receive. Executives promised upgrades next quarter, then next year, then didn't deliver at all. Criminals don't wait for system upgrades. They thrive on the gaps, on speed, on silence. The faster money moves, the faster it disappears. 3 banks, 3 countries, 3 hours, gone forever. That's why the U.S. called TD Bank an express lane for global crime. Investigators also discovered that criminal groups were using an advanced laundering method, known as mirror transfers. Here's how it worked. Dirty cash entered a TD account in the U.S. Meanwhile, at the same moment, a clean equivalent amount was released from an account overseas. No wires crossed borders. No suspicious international jumps occurred. The dirty money stayed in America. The criminals received clean money abroad. A perfect financial illusion. Legal on the surface, illicit in the shadows. Add shell firms in South America, underground bankers in China, and front businesses across the United States. And the laundering network became so complex it took federal agents years to fully map it. When the DOJ finally delivered its findings, the language was brutal. It accused TD Bank of years-long failures to monitor high-risk activity, ignoring whistleblowers, overriding internal red flags, allowing criminal networks to infiltrate branches, and maintaining compliance systems grossly inadequate for a bank of its size and complexity. The message was unmistakable. TD Bank didn't merely overlook criminal activity, its negligence empowered it. For Canadians, the shock was deeper. TD wasn't a fringe institution. It wasn't a high-risk startup. It was one of the country's most stable, respected banks. If this could happen there, people wondered what might be happening inside other major banks worldwide. How many institutions are running outdated technology? How many compliance teams are drowning in thousands of ignored alerts? How many global criminal networks have already discovered similar weaknesses but haven't been caught? The TD Bank scandal exposed an uncomfortable truth. Modern financial systems move faster than the oversight designed to police them, and criminals move faster than both. Algorithms can be outdated, teams can be overwhelmed, alerts can be missed. And in an era where billions can cross borders in seconds, money can be laundered before regulators even know it exists. In the end, the $3 billion payout won't erase the stain. Fines fade. Logos get redesigned. PR departments issue polished statements. But trust, once fractured, rarely returns to its original shape. TD Bank didn't just process deposits. It processed the line that separates legitimate finance from organized crime. And no one knows if that line can ever be drawn as clearly again. Because now every customer walking into a branch carries the same quiet thought. If millions in cartel cash walked through these doors for years, what else slipped through? If this deep dive changed how you see the financial world, Hit like so the truth spreads a little further. Subscribe for more high-voltage exposés that reveal the hidden machinery behind global money flows. And share your take in the comments, because here's the real question. Is a $3 billion penalty true justice, or just the cost of doing business for a giant like TD?